primary.
Right.
So primary plus 4
Well,
in order to get a new loan.
we are going to take a commercial break, and then we are going to be right back and ask you some more questions. Thank you.
Sounds good. A loan where you have to put down 3.5%. What has changed is there used to be a lot of first-time home buyers with 0 down. And that really, as you know, when you're talking to people about their personal finances, maybe it doesn't make that much sense. If you don't have some down payment nowadays, you probably shouldn't be buying. In the old days when you had
That's
to
kind of
put
what
down,
caused this whole problem in the first place.
yeah, 0 down, I can walk away and I've lost nothing. You should have some skin in the game too if you're buying a house. You can still buy it with 3.5% down. Now you can do that. That 3.5% can be a gift from a family member. It can no longer be from the seller. That was also a problem. It's got to be a gift from the family member. But that's probably still the best first-time home buyer vehicle out there. It's a plain vanilla 30-year fix, so your rate's not going to adjust. You won't get in trouble.
So it's funny, when I started in this business over 30 years ago, FHA was the way to go. That's where all the money was, and then we went into PMIs and conventionals and all kinds of other. Now, well, those programs have pretty much not dried up so much, but now we're going right back into the FHA programs again. Yeah,
the FHA stuff is still a great product. I was reading where the national average in the industry is 40% of new loans are FHA.
Wow.
The other 60% being your Fannie Mae and Freddie Mac.
Right.
But 40% is FHA or VA, I should call them both, the government type loans.
Right.
And that's about what our company is running as well.
So now getting into the first time, staying with the first time home buyer scenario, what about this tax credit that we hear so much about? I think it's a $7,500 tax credit. Is that helpful to first time home buyers?
$7,500 tax credit, it can be a good thing. Everybody should know that offer expires, it's either June or July of this year.
Have to close by June or July?
Yep, close by June or July. You know, I always would tell you to talk to your person that helps you with your taxes, your accountant or whomever, or read up on it yourself. But it's a good concept. It is a deferral. You get the $25 credit, so you've got money off your taxes or a refund in that first year. And it's deferred for either 10 or 15 years. I can't remember.
I think it might be 15.
I think you're right. I think it's over a 15-year period. So it's like a free loan for 15 years, the credit or deferral.
Have you seen that come into play where it's been mentioned, or is there any accounting where, well, I bought this house because of this tax credit? Have you seen?
I've seen it mentioned in some advertising.
I'm saying in your offices.
I've heard it mentioned a couple times. I've heard some people trying to take advantage of it.
But people aren't busting down the doors to take advantage of it.
No. Yeah. And there are talks of other proposals that are out there floating around Congress and whatnot that might even be greater. But this one's out there with the expiration of end of June of
which hopefully they might even extend, which probably would be a good stimulus in and of itself.
Yeah. We're going to need a lot of help
we are.
About June, I think, it seems.
I think so. You feel that way too, I think.
Yeah. Well, I mean, the government has agreed to buy the mortgage-backed securities, which has brought down rates through June. So if they stop in June, we may see the left foot really fall or the other wheel come off. So
the banks are going to have more of a cash flow problem.
The banks, Fannie, Freddie, nobody's going to be buying these mortgage-backed securities. So we'll need the government to redo that program, and I'd say there's a good chance they will.
Well, talking about first-time home buyers, I mean, you've got people and it seems as though we're just drawing all our equity up, that have money in 401ks or IRAs and retirement funds. Are they allowed to use some of that cash as a down payment towards the purchase of their house? Without penalty, of course.
There again, you need to ask your accountant person about that. But yes, you can through a self-directed IRA. And that's not a bad way to go. You want to stay diversified. You don't want to have everything in real estate, as we're learning now, nor do you want to have it all in stocks and bonds. So it's not a bad way to go.
So there's a possibility to do that, even though it's really not the most secure way to do it, but you can do it without penalty. I guess that's what everybody's doing.
Self-directed IRA.
You know, people are withdrawing funds from their 401ks to pay the mortgages out, that seems to be crazy. But I mean, you got to do what you got to do today. What about people with poor credit? We had mentioned, and we were speaking about subprime situations. Are there mortgages available for people with poor credit?
It's very limited there. You know, your credit score shows your ability or your desire to repay. What's your payment habits? And if you don't have good payment habits, especially if you had a mortgage late, it gets very difficult. Those folks' options are very limited.
So you're saying the subprime market pretty much is dried up?
Yeah. Those loans quit being purchased June of '08. So it's been gone. We're still passing legislation to stop it, but nobody's buying those mortgages. Therefore, no one's creating those mortgages.
But as the credit situation gets worse, which I believe it is,
Yeah.
okay, for most people, not for most people, for a good portion of the country, I'd say the credit situation is getting worse because credit cards are being canceled and people cannot keep up with these payments and people are losing their homes. We're only going to have people buying homes that are prime mortgages.
It's going to be a tough time, that's for sure. You've got to, you know, one thing our company does offer is some credit repair for a lot of folks that we meet with the first time and they've got a credit score that really doesn't work to refinance or work for a purchase. We'll put them in a program and try to help them make some corrections or pay some things down or pay some things off. In some case, there's a custom strategy for each person to try to get there.
So that's a value-added service that your company has where you'll help them repair the credit in order
Absolutely.
To work it out.
Our goal in our business is to create and enhance successful home ownership. And if I can help someone get in a home and put them into a mortgage that they will be successful in, that's our mission.
That's great.
Yeah.
So getting back to buyers with no money down and no cash for closing costs, are there still programs available for that? Let's say they have good credit, they have, and they just want to preserve their own cash, and they want to do like the banks do and hoard their cash.
It's really gotten limited. If you, like I said, if you're doing FHA and you've got a gift from a parent or something like that, that's essentially no money down.
Well, I guess more in the case of building it into the price, where they don't
You can't really build it in the price anymore, and that was a problem that was going on. Beezer Homes here in Charlotte, you saw a lot of that stuff. That's really shouldn't have been done in the first place. It was not, that down payment assistance was not intended to be inflating the price and then paid by the seller. So that's gone.
So pretty much you have to have at least, if you're going to go with an FHA situation, 3.5% down.
Yep, and the 3.5 can come from a gift.
Okay.
Okay, the other options
There's no seller financing allowed.
No.
Okay.
VA loans can be done with no money down if
That's
you've
always
been in
been
the service.
That's always been the case.
Yep. So first-time home buyers, zero money down, VA, FHA with a gift, and then there's the rural housing, which is a government-insured program. Problems with it, or what makes it difficult, it's only for certain areas.
Like
there's
some areas, the farm loans?
Yeah, it's a metropolitan statistical analysis deal. You can key in a zip code basically and see if you're in a rural area. Mecklenburg County, 99% of it is not. Gaston County, Lincoln County, some of those areas, it does apply. And then there's some income restrictions. You can't make more than X. But that's another, you're asking what products are available with no money down.
They're restricted geographically.
That's right.
And are they backed by the ADA? Is that what those other loans backed by the ADA?
I think it's a regular government-backed security, government backed by HUD.
Right. Okay. What about PMI? Just talk briefly about these PMI companies. Have they survived this crisis? Or
they have survived this crisis for the most part. There's been a little bit of fallout. People used to think PMI was a bad thing, but it's actually, in the old days, before I was in the business, you had to put 30% down until these independent companies came in and insured the top part of that loan.
Right.
So it's helped a lot of people, but it has gotten more restrictive. The mortgage insurance companies, for example, won't do a loan amount above 90% on condominiums, or they won't insure a loan above a certain loan to value with different criteria. That's changed. It's part of your credit crunch.
We are going to take a break. We have some more questions for Charles.